Hey you all, welcome back to Off the Charts OTCCTV with your girl Shima. I am going to go ahead and do our weekly outlook analysis on gold, but don't forget to like, subscribe, comment, let me know how you guys are feeling about the chart as well. And you know, subscribe and like for the algorithm. I keep saying it and I'm going to keep saying it because hey, if I don't say it, who will, right? Thank y'all for looking out for me. I appreciate y'all. Let's hop into this chart. All right, so here we are on the monthly chart. As we see, price is just not even in a doji yet. We've barely created a body yet here on the chart, but it is literally just at the bottom of the body of the prior month's candle, right? So price action is currently sitting at around 1940, 1939. Okay. Plus we have a wick here at 1952, meaning price pushed all the way down here to 1939, right? Hey, there's a lot to go down here if we wanted to fill the shoes of the prior month's wick here, right? So let's keep that in mind. Also, as we see here at that green box, that's a demand zone that price could potentially reach to as well. Again, just because we have this wick rejection here on that monthly. And again, price is giving us a bearish, sort of a bearish candle thus far. Again, it's not much of a body of a candle yet, but for the start of the month, we are a little bit bearish. So let's move over to our weekly. Price has moved up just a bit here. It's pushed out of our demand zone. But again, let's keep in mind that that's that wick area that we saw on the monthly here from 1952 that we had. 1952.99. So 1953 to 1939. Full wick of a rejection here on our weekly, which matches the monthly. However, the body of this candle is fairly bullish, but we did not close above this, you know, change of character, if you will, right here, which was at 1943. We didn't close above that. Also, it would have been nice to close above around this 1959 as well to see more potential upside. So currently right now, you know, it can go either way just because this weekly is a little bullish, although our monthly is bearish. So we want to keep that in mind as we go into this week. You know, there are some levels up here that we could potentially reach again. However, keep in mind that we are pulling back seemingly based on the monthly and now the weekly, even though, again, this is a bullish candle. Let's head over to our daily. Here on our daily, price is still above the 50 here. Again, however, as we're seeing here, price is... we have a huge rejection here, right? So price could retreat. Now price could cover some of this area to, you know, push to the upside. But again, we did close beneath that prior day's candle, right? Meaning that we could also potentially see some more downside. But price is still above the 50. So we'll keep all that in mind moving into this next week. Also, I want to point out this level here on the chart, the change of color here, that's at 1942. That would be an area that we would want to cross to see more potentially upside. And then also 1946. So 1942 to 1946, I would like to see us break across to see more potential upside, which would lead us back to this 1954, 1953 zone, and then potentially see the 1965, right? However, if we don't get that, right, and price plays a little bit and we get rejected again here at 1946 or 1943, then we can see some more of this downside. We would need to break. I would like to see a first break here at 1937, this 1935. So between 1937 and 1934-35, break that, right? And then we can see some more downside, may catch that 1931, and then we can see probably a nice more move here to 1926, and then potentially further here into this 1923 to 1920 zone. But again, totally up to price action. is also up to some of this week's news. Let's not forget, Monday is an actual holiday in the US. It is a Labor Day, meaning that some of the market's volatility will be a little bit slow. Some traders like to see it as manipulation. Whatever the case may be, I believe it's just not the greatest trading environment for most traders. Some traders definitely know how to trade it. They've traded it before. They're comfortable with it, but not all traders are. And if you're one of those traders, that's okay, right? It's okay if it's just not your environment. If it's not your day to trade, then hey, don't trade it. Take the day off, off of the charts rather. Like you can create some back testing for yourself, go over your goals for this month, right? Like set yourself up for success, right? Dig into your lot size, see if your size is good for you, right? Or not, whatever the case may be. Think of some other things that you may be able to do that can keep you away from the charts if volatility is something that is needed in your trading plan, right? If not, do your thing. You know what I mean? Don't let anybody stop you. You know what you're doing, right? So at the end of the day, that's what I see in the charts. I do want to throw this trend line in here really quick so you guys can see also what I'm looking at, where price could fall to and potentially bounce off of. Again, price could see this 1930 right here, right? 1930, 1929, probably 27. If you will, you can see this area, price could potentially hit this trend line and then bounce back up, or price can break it. So I would definitely like to see how price responds in this zone right here. That is an area of interest for me if price pulls back down some more. And we already covered the other level. So yeah, y'all stay focused, stay determined, stick to your plan, respect your plan, respect yourself, and y'all keep trading. Peace.